Every economic crisis creates opportunity if you know where to look. We just hired a new writer for Market Briefs, and one of the most difficult parts about our training process is we have to train you to be an unbiased writer. And the reason why this is so difficult is because every person, every human being who has a soul has emotions. And when you have emotions, naturally you have some biases. But when you're writing, and when you're looking at the financial news, what you have to be able to do is cut through the noise and cut through the emotion and understand that there is no good and there is no bad. It just is what it is. I'll show you what I mean. When the markets are booming, is that good or is that bad? Most people are going to run to tell you that this is a great thing because now stock owners are making more money, asset prices are rising, it's good for the economy, that means businesses will have more money to spend, and that means people, if they sell their stocks, will have more money to go out and shop and have more nice things, which is good for the economy. But what about the people that don't own stocks and they want to own stocks? That means now it's more difficult for you to go out and own a stock. Stock prices rising mean now you need more money to be able to go out and acquire some asset ownership, which means it's more difficult for you to go out and compete. It's more difficult for you to go out and buy stocks because it's so much more expensive. Or to make it more interesting, let's flip the script. When markets are crashing, is that good or is that bad? Again, most people will run to tell you that markets crashing is bad because that means people are losing money. That means companies are losing value. That means people will have less ability to spend. That means companies might go bankrupt. That means people might lose their jobs. But it can also create opportunity when people use this as an opportunity to buy stocks or other assets at a discounted price. I mean, I can tell you from experience that when the 2008 real estate crash happened, it was a huge opportunity that allowed me to make a lot of money because I was going out and buying real estate for pennies on the dollar. Likewise, when the 2020 pandemic happened, yeah, it was bad in the sense that the stock market was crashing, but it created a huge opportunity for me because I was able to go out and buy a lot of stocks at a discounted price, and I was able to make a lot of money because of that opportunity. And this is where most people won't tell you this because it hurts people's feelings and it feels uncomfortable and it gets people triggered. But this is the dichotomy of our economic system. There are going to be winners and there are going to be losers. And if you want to be able to find the opportunity, you have to be able to separate the emotion and find the opportunity. And that also means you have to be able to see both sides of an argument. And that's unfortunately very difficult in today's society because people are very emotionally charged with things. It's very easy to get emotionally riled up over whatever the topic is. And when you do that, well, it's very difficult for you to see the other side of an argument. Let me give you a few examples so you know what I mean. When Spotify comes out and they announce that they're going to raise prices for their services for the millionth time, what happens? Well, naturally, it makes their customers very angry because now I have to pay more money to listen to stuff on Spotify. But on the other end of that same coin, that very same news is making somebody very rich. You can see how this triggers people. When Meta comes out and they say that they need to restructure their company and they're going to lay off 10,000 people, this naturally makes their employees very upset because now people are losing jobs and people are not happy when they lose their jobs. Again, if you look at the other side of that same coin, that same news makes some people very rich. When you hear the news that unemployment is rising, is that good or is it bad? Well, it's bad if that means that you're losing your job, but it's also good on the other side because for the Federal Reserve Bank, they've been waiting for unemployment to rise. That way maybe they can start cutting interest rates. This is why the psychology of investing is so important because humans are emotional beings. Every single person, I hope, has an emotion, but money doesn't. Now hear what I'm saying very carefully. Am I saying that you need to be this emotionless, selfish, self-centered, money-hungry, greedy person who only cares about money? No, absolutely not. You should have emotions. You should feel things when you hear somebody loses their job. But what I'm also saying is you have to understand the way our economic system works. Because if you don't, you're going to continue to be a pawn in our system. And unfortunately, the problem here is most people are never taught a thing about how money works and how our economic system works. So then you go to school, you work hard to get a degree, you work hard to work at a job, but you have no idea of what's happening in our economic system. You have no idea how our economic system actually works. You have no idea how the rich keep getting richer, and all you're doing is getting upset because of the way the economic system works because you never understood how the economic system works. But if you understand the system, well, now you can benefit from the system as well. For example, when the government comes out and they say that they're going to launch a new spending program, is this good or is it bad? Well, if you're on the receiving end of the spending because the government is paying you money, they're writing checks to you, it's good news because you're getting money in your pocket. But it's not so good news if you're the one that has to pay the price through inflation, or if you have to pay the price through your taxes. Now, these are things that we've been covering in Market Briefs, by the way. Market Briefs is my free financial newsletter where every day my team is working to break down what's happening in things like the economy, the stock market, the crypto market, the global economy, and our own economy into a fun, witty, and easy to read newsletter. You can read Market Briefs in less than 5 minutes every morning, and it's completely free. So if you haven't joined Market Briefs yet, I got the link to how you can join down in the description below. Or you can go to briefs.co/market. That's briefs.co/market. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.